The purpose of this video is to go through a very common request that comes up when you're applying for either a loan modification, a short sale, or a deed in lieu with the bank. Those are all loss mitigation options, and loss mitigation always requires an application and a financial package. And so something that commonly gets requested by lenders as part of this is something called an LOE. LOE stands for letter of explanation, and it's really just a letter that the lender uses to ask you to explain something to them. When there's something that's unclear or irregular or unusual, they will want you to send in an LOE. And so the best thing you can do as a borrower when you're preparing these loss mitigation application packages for yourself is understand what the lender might be asking you and then prepare a letter of explanation so that you can include it in your initial package to help everything move forward quickly. So before we get into kind of the four main times when you would need a letter of explanation, just a quick word about formatting. So when you write your letter of explanation, at the top, put the borrower's name. Now, if that's your name, make sure you're using your name as it shows on the mortgage statement, not a nickname or any sort of shortened name that you go by. Use your name as it shows on the mortgage statement. Underneath your name, write your loan number. Your loan number is somewhere between 6 to 10 digits, sometimes more digits. It's usually found in the upper right-hand corner of your mortgage statement. Underneath your loan number, write your property address, the full property address, just as it shows on your mortgage statement. Having that header on your letters of explanation will help it very quickly get attached to the file, and it will help everything move forward quickly. A quick reminder about formatting: typing is always best. Short, concise sentences, no more than 5 or 6 sentences per letter is perfect so that the lenders can just quickly read it. If you're typing it, try to submit it in a PDF format, not in an editable Word format. Sometimes things can get kind of jumbled when you send in a Word document. If you don't have the option to type it and you're handwriting it, that's totally fine, but just make sure you're using legible handwriting and making everything as clear as possible. For handwritten letters, it's always good to leave a space between each line just to give the lender the optimum, fastest chance to read it quickly and understand kind of what you're writing. So let's go now to just the 4 situations you can expect to either have to send in an LOE or be asked for an LOE. The first one relates to pay stubs. So if you are a W-2 employee that receives pay stubs and you want to apply for a loss mitigation option like a modification or a short sale, right? The lenders will ask you to send in your pay stubs to verify your income. Very common, you have to do it. But a lot of W-2 employees have kind of different things showing up on their pay stubs. So if you're an employee who has something like commission or a bonus, or maybe you've taken some time off and you have unpaid vacation or paid vacation getting deducted, or some sort of PTO thing is something that we see. Your pay stubs may show kind of irregular pay that's not necessarily clear to the lender what you're showing them. For example, if you receive a one-time bonus once a year, your pay stub that you send in for 30 days might look really large. You need to explain to the lender that that's not a normal reflection of your household income. You need to explain that it reflects maybe a once-a-year bonus or however that bonus comes to you. And so typically you'll want to include a letter of explanation to tell the lender, hey, this is what my base pay is. This is the commission or the bonus I'm receiving. And then you want to tell them the frequency of the bonus. If it's a regular bonus that you receive monthly that you really can count as part of your household income that is reliable, tell them that. If it's not, if it's a quarterly bonus that you don't know if you're going to hit, then you have to explain that to them as well. So before you send in your package, look at your pay stubs. If you are paid in that type of way, you might want to include a letter of explanation to point the lender to the various things on the pay stubs that are showing as irregular. There are other videos on this page to kind of help you understand how to present your income and what kind of ratios you're looking to hit. That's kind of a different question. This video is just more focused on if you have one of these irregular things showing up on a pay stub, you're going to want to explain that to the lender. The second most common time a letter of explanation is required to be sent in is if the lender is requesting something that is required that you don't have. Most frequently, we see this with tax returns, bank statements, and sometimes pay stubs. So as you know from other videos here, tax returns and bank statements are required as part of a financial package. However, a lot of times you don't necessarily have a bank account that's open, or sometimes people haven't filed their tax returns yet. you can still apply for loss mitigation options without an open bank account and without a tax return. Granted, sometimes it makes it harder, but you still can do it. But if you're going to do it and you don't have a recent tax return filed or you don't have a bank account, you need to use an LOE or a letter of explanation to tell the bank that what they're going to be asking for doesn't exist. If you don't include an LOE and you don't explain that to them, your file will get caught in this never-ending document cycle phase where it just sits, never being completed, because the lender will think that you have those things and that you're just choosing not to provide them. So make sure you get a letter of explanation in and tell them exactly what doesn't exist. So if you did not file a 2018 or a 2019 tax return, you draft a letter and you say, I do not have a tax return for, and then you list the years. If you don't have an open bank account, or if your bank account was closed, or if you're having some issue with your bank account, you have to tell them it doesn't exist. Now, please understand, a letter of explanation does not mean that you get to send one in just because you don't want to provide the other things. If you're going to apply for a modification or a short sale or a deed in lieu or a repayment plan because you're in default, you need to have those things. And so if you have them, you need to provide them. If they literally don't exist because you didn't do it, that's when you use a letter of explanation. But you don't use a letter of explanation just because you don't want to provide your tax returns. Below this video, there is also going to be a link to the IRS page where you can request a copy of your tax transcript in the event you don't have one. That's kind of a side note. A third common scenario where borrowers are asked to use a letter of explanation is related to contributor income. So if you're one of these households where you have someone in the household who lives there and contributes a regular amount of money every month to the household income, and you want to use this income, you'll often need to write a letter of explanation to tell the bank that you have a household contributor. Some lender applications will have a space where you can write about your contributor, some don't. So the best practice is to just have a letter of explanation drafted. In the letter of explanation, you'll want to include the name of the household contributor, their relationship. So if it's, let's say it's your mother who lives with you and she pays you $500 a month to help with utilities and food, or if it's your adult child and they're living in the home and they pay you a monthly amount, you should include that in the letter of explanation. And then you want to include a line for the contributor to sign the letter of explanation as well. What that's doing is that's showing the bank that this is a legitimate person, the income that you're claiming is legitimate, and it does actually contribute to the household. So again, if you have a contributor, a letter of explanation explaining who they are, what they contribute, what they're doing, signed by you, the borrower, and the person who's contributing as well. And then just a side note, we have other videos about contributors, but make sure if you're claiming contributor income, make sure that that cash deposit that they're contributing shows on your bank statement every month. Again, look at other videos for that, but I just have to throw that in there. Okay. The last thing that letters of explanation usually get requested for are super large deposits showing on bank statements. So part of loss mitigation review is the lender is trying to make sure that you don't have anything weird coming into your bank account that you should be using to pay the mortgage. And so the general rule is try not to have any huge, large deposits coming into your bank account unless it is a genuine form of income. But let's say you sold something from your house that was worth a lot of money. And so you have a one-time deposit of $2,000 that comes in, that's going to show on a bank statement. You don't want the lender to think that that's part of your regular monthly income, because then they'll think you have a very high income and they might offer you a very high payment. So you need to write a letter of explanation and you need to explain to them that the income that they're showing is a one-time only type of income. Tell them what it was for and make sure you tell them that it's not recurring. That will make sure that it doesn't get included in your regular monthly income. If you can avoid having random deposits coming in while you're going through the application process, that's always better, just for smooth sailing, ease of purposes. But if you do have a larger deposit, you're going to want to explain that to the lender. So my last comment again is think about what you're presenting to the lender. Think about if anything you're presenting requires additional explanation that they wouldn't know from just looking at the application they're asking for or from just looking at your financial documents. It's time to create an LOE or a letter of explanation and explain to the lender what they're seeing to help expedite review. Good luck.